Hello, day two. How are you today? As promised, today we're going to dig deeper into the concept of revenue. Specifically, we're going to look at the first of your four key numbers, which is real revenue. Now, yesterday I left you with a question to chew on. And that question was this: is a business that collects $1 million in revenue a $1 million business? And the resounding answer is no. The reason is because of real revenue. Now, real revenue is your income after you pay for coaches and other items you sell, like supplements and apparel. Now, we love the concept of real revenue because total revenue, which we talked about yesterday, can be very deceiving. For example, let's think about a construction company. I've dealt with clients that have over $5 million in revenue as a construction company. And this particular owner that I'm thinking about was also spending money like he was a $5 million business. But if you take away the money he had to pay for lumber, flooring, the roof, everything that goes into building a house, plus paying the subcontractors who actually did the work, if you take all that money out, he was left with less than $1 million. So really, he should have been spending money like he was a less than $1 million business, because that's his real revenue. He's not a $5 million business. We love real revenue because that allows us to compare any business in any industry to any other business in any other industry. Now, in your case, the real revenue component we're going to talk about is paying your coaches, and then the money you spend on supplements and apparel that are then available for sale. Those need to come out of your total revenue in order for us to figure out what your real revenue is. So let's talk about some geeky accounting terms really fast. Inventory versus cost of goods sold. They're very related, but they're also very different. So let's say you bought 100 5-pound units of whey protein from Drive Nutrition, and that cost you $2,000. In accounting terms, you now have $2,000 of inventory. In accounting terms, that $2,000 is not an expense. Now, your eyes are probably glazing over at this point. Bear with me. I promise it's a quick example. Now, let's say you sold 25 of them for $1,250. So your total revenue increases by $1,250. At this point, you would then take $500 from inventory, because that was your cost for the 25 units, and expense it as a cost of goods sold. So your real revenue on that would be $750. Also, your new inventory balance would be $1,500 instead of the original $2,000. So cost of goods sold is an expense and inventory isn't. So who cares? Look, I just wanted to share that with you so that you know how smart I am, and that you don't actually have to have accounting make sense to you in order for you to understand your four key numbers. For sake of your four key numbers, all we're going to focus on is the cash that left your bank account, and in exchange you got back apparel and supplements that are now available for sale. We just want to focus on the cash. We're not going to worry about is it inventory or cost of goods sold. If the cash left, that's the number we're going to use. So I'm going to show you where to put that in just a minute. But the other component of your real revenue that we need to understand is how you pay your coaches. And we're going to talk about these three ways in which you could be paying your coaches. They could be on salary, which is a fixed cost to you, and the same amount of money each month to you. They could be getting paid per class they teach, and or they could be getting a percentage of the box revenue for the services that they're coaching. Now, we are not going to worry about salary for the worksheet right now. What we are going to worry about, and I'm going to show you how to enter those right now, is paying your coaches per class or paying your coaches as a percentage of revenue. So you can now go to your worksheet. Again, this should look exactly like your worksheet. You should have your total revenue number here. Now for day 2, we're going to put numbers in these 3 boxes. If you don't sell supplements or apparel, great, leave them blank. That's totally fine. We want you to put your cost for paying coaches, if you're paying them per class, in this amount or in this box. And if you're paying them as a percentage of revenue, you also put them in this box. So you might have to do some fancy calculating. So let's just say I pay my coaches $100,000 for coaching per class, and I've also paid them another $50,000 on the percentage of things they share. That's how you would do that formula. Or if you just know ahead of time what the number is, just type it in. Most are going to know what that number is. For the cost of supplements and apparel, you should be able to figure that out. You can look at invoices. You could potentially even contact your suppliers. Sounds like a drug dealer. You could contact your suppliers and find out that number, but we're just looking at the cash that left. Okay, so hopefully that's pretty clear. That's it. That's that simple. So don't forget, the IRS poops in your shoes, and we'll see you tomorrow.